Hi, this is Rick Durkee, founder of the Coastal Financial Planning Group. Welcome to Retirement Income Planning Strategies, the video and educational series that teaches financial tips and tactics to set you up for a fantastic retirement lifestyle. In this episode, I'll educate you about estate planning from the perspective of 4 crucial strategies to preserve and pass on your wealth. Let's start with this understanding of proper estate planning. It's about more than just avoiding taxes. In fact, according to today's estate tax thresholds, your estate would have to be valued at over $22 million to be subject to estate taxes. At the Coastal Financial Planning Group, we teach our current and prospective clients how to build a legacy plan that achieves the following objectives. 1. Passing your estate to who you want and what you want them to receive. 2. Have your estate pass when and how you want your heirs to receive it. 3. An estate that passes in the most tax-efficient ways possible. It's all about proactive planning, folks, the theme that runs through every episode in the Retirement Income Planning Strategies series. Proactive estate planning involves partnering with an estate attorney to establish whom and what, and a financial advisor to plan for when and how. That partnership helps to accomplish efficiencies while minimizing tax implications. At the Coastal Financial Planning Group, our clients love that we provide them with a list of trusted professionals who partner well with our firm. This hand-picked list contains trustworthy experts such as attorneys, CPAs, and elder care experts. Over the years, estate tax thresholds have been lowered and raised, yet there have consistently been life insurance options that make sense for estate planning. Now, before you start thinking, oh, not another life insurance pitch, consider that the right life insurance can save you and your loved ones money, headaches, and heartaches. It's the first strategy in properly passing on and preserving your wealth. For life insurance with estate planning, consider the 3 P's: protect, preserve, and provide. The right policy can preserve your estate so that you pass on as much of your inheritance as tax-free as possible. It can protect your estate from the astronomical costs of long-term care, not to mention the burden put on your loved ones for long-term care costs. It can also protect against future tax hardships for your survivors. Life insurance also provides easier estate transfers with ironclad beneficiary listings that overrule what's written in wills, trusts, and bypass probate. Looking for a way to fund life insurance premiums? Many of our clients have successfully utilized their required minimum distributions from their IRA accounts. Of course, you'll want to consult a financial professional about this option, as it does require advanced income planning techniques. If you don't have a trusted advisor, please get in touch with us. A URL will be at the end of this video to schedule a relaxed conversation with me. Okay, now on to strategy number 2. Plan ahead for long-term care. As an old friend of mine likes to say, getting old is not for wussies. Even with the incredible advances in modern medicine, our bodies are machines that will break down over time. Therefore, they need to be cared for as we age. Just consider the activities of daily living such as eating, bathing, toileting, dressing, grooming, and mobility. Who will help us with these if we can't help ourselves? Unfortunately, home care and health care costs can seriously erode a person's wealth. That's where long-term care planning comes into play. It's not only a tool to provide the proper care you deserve in your retirement years, but it can also alleviate the costs and burdens placed on your loved ones. Here's what you need to know about planning for long-term care and how to pay for it. First, let's be clear that long-term care doesn't equate to insurance. It's about planning ahead to cover the average cost of $250 a day for care over a 2 to 3 year period. Based on today's calculation, that's over $270,000. So how do you pay for such a large expense? You could earmark certain assets ahead of time, such as investment accounts or home equity lines of credit to cover the cost of obtaining long-term care to avoid out-of-pocket expenses. Another consideration is a life insurance policy with a long-term care rider. Here's how that option works. It's a policy addition that slightly changes your life insurance, allowing you to use part or all of the policy's death benefit for long-term care expenses while you're still alive. This option creates a multi-purpose tool that pays if you need it while you're alive or passes to your beneficiaries guaranteed. Here's strategy number 3, leverage home equity. In the past, most retirees would pass along their homes as an inheritance, but today, many folks realize that increased life expectancy means increased expenses. Do you have a retirement income plan to cover those costs? Many retirement-minded homeowners are starting to ask themselves this question: access equity or pass it on? The answer all depends on your individual situation. It makes sense for some of our clients at the Coastal Financial Planning Group to leverage their home equity as part of their estate planning strategy. Why? It can provide them with an efficient, tax-free retirement income stream. It's one of the strategies I reference in episode 5, Retirement Income Streams, 3 tax-free sources to fund retirement. Look for it on our YouTube channel under Coastal Financial Planning Group, and be sure to hit the subscribe button so that YouTube can alert you to all of our new episodes. Here's another reason why clients leverage their home equity. It's their ace in the hole if long-term care costs arise during later retirement years. It's also essential to remember that a home is your one asset subject to probate unless in a trust. Now, according to some of our realtor friends, more than 90% of the time, children sell an inherited home. After probate, which can take some time in today's court systems, the house must be cleared out and sold in many cases. Someone has to take on that responsibility. So sometimes it makes more sense to access home equity ahead of time. Again, every individual and couple has different situations that must be evaluated through a customized estate planning strategy. These are educational videos, so part of their purpose is to get you thinking. So for strategy number 3, ask yourself, access equity or pass it on? Now, our 4th and final strategy, build a checklist. If you want to make transferring your wealth to your beneficiaries as easy as possible, create a list of what's needed beforehand. It's not easy when a spouse or parent passes. The loss of a loved one can be compounded by the weight of trying to organize the financial affairs of the departed. Let's not do that to your survivors. Building a checklist gives you and them a plan for handling the decisions and issues that must be addressed when you're gone. In addition to a will, trust, birth and marriage certificates, a checklist should include these essential financial documents: insurance policies, mortgage statements, retirement fund or pension statements, investment records and stock certificates, 2 years of tax returns. The list goes on, but don't be overwhelmed. You don't have to start from scratch. We're here to help. In addition to filming a future episode on surviving spouse and surviving child checklists, we can now provide all current and prospective clients with a PDF version of these checklists. Each checklist has 25 steps and action items to ensure an organized process for your surviving spouse or child. They'll save a lot of time, headaches, and heartburn. If you want to obtain the checklists, email us at info@cfpgroup.biz or schedule a relaxed conversation with me by going to calendly.com/cfpg/schedule. We'll never pressure you or try to sell you anything. Instead, our goal is to always educate you. That's how we build relationships at the Coastal Financial Planning Group. I'm Rick Durkee. Here's to you enjoying a fantastic retirement lifestyle.